Hello, everyone, and welcome into crushthestreet.com. We're hitting the ground hard here, running in 2019 with just some of the brightest minds in the space. And we got a brand new guest on the line, and I'm really excited, and it's a pleasure to have him on. He's an authority in the crypto space. He's built something truly special, and congratulations to him on that. So we're going to get the pulse of what's going on in crypto from Nicholas Merten. NicholasMerten.com is his website. He's got a very popular YouTube channel, Datadash, that I highly recommend people check out. Nicholas, without any further ado, thanks for coming on Crush the Street with me today.
Kenneth, thank you for having me. Big fan of your channel.
Well, appreciate that. First of all, tell us how you got involved with crypto and just what was your start and what attracted you to crypto and obviously led you to where you are now?
Yeah, so I have a long and semi-ironic story. Basically, I got into, or at least first discovered about the brand of Bitcoin back in 2011 when no one was talking about it. This was before the Silk Road and a lot of the craze that came in 2013 and beyond. And at the time, I was someone who was kind of a skeptic of finance. So I was learning about 2008. I was learning about the financial system, central banking. And I started to really almost kind of get not so much a depressing view, but a kind of like, view of like, man, there's got to be a solution to this somewhere that's going to fix these problems of the central banking system and the traditional financial system in general. There was a lot of flaws abroad. But I came to this video on YouTube as I was always watching documentaries, and it was called What is Bitcoin? At the time, it was an animated video that only had around 20 or 30,000 views. And I watched it, and it talked about Bitcoin as this new form of money that uses blockchain technology and mining. And I was really interested in this idea of decentralized money. It did capture my eye at first, but I was very thrown off by blockchain and mining. And I thought, okay, this sounds a little too good to be true. Sadly, I made a really big mistake. And the mistake was that I didn't go forward and actually read the Bitcoin white paper until much later on. I was a trader at the time in traditional financial markets and equities, so I wanted to see what people were paying for this. And I saw it trading for $3 on Bitstamp in November of 2011, and I was like, who in their right mind would pay $3 for some digital token? Like, it didn't make sense to register at the time because I didn't understand blockchain or mining or what really Bitcoin brought to the world stage with its monetary policy. So I later down the road, I kept on hearing about it, heard about the Silk Road, and I kept hearing the buzz around it over the years. And I was like, you know what, I've got to finally look into this. So in early 2016, I read the Bitcoin white paper. I fully understood it, and it was like a slap across the face because I was really upset. Not that I missed the investment opportunity, but the fact that I had waited so long to finally discover this technology that was what I was looking for the whole time, or at least the first step. So from there on, I mean, the rest of the story is pretty self-explanatory. I just got sucked into the loophole or sucked into the rabbit hole of cryptocurrencies. Been researching day by day different forms of technology for distributed ledger technology, as well as different means of reaching consensus and all kinds of new technologies coming out. And I'm excited more than anything. My ultimate goal in all of this is to see peer-to-peer cash in the cryptocurrency space go to the mainstream and to see people actually using cryptocurrencies. So that's kind of my big mantra for life. I hope to hopefully help on delivering that.
Well, you're doing a great job, and don't beat yourself up too bad. I've talked to a lot of people in the space. We all wish we, were deeper into crypto when we first knew about it. But on the flip side of the coin, a lot of the people that had it very early on, it's very few that actually held on to $3 Bitcoin through, let's say, $30 Bitcoin. They sold at 30, kicking themselves that they didn't wait till at least 1,000 or 20,000, right? So it's one of those things that, Bitcoin has always been proving its value to the world. Even right now at $3,400 Bitcoin, the investment community is saying, is this going to be around in another couple of years, or is it going to fizzle away? So, I'll pass it back to you. What are your thoughts on this?
Yeah. I mean, first off, you're very right. I think that's just a rule of investing is don't beat yourself up. You can't always be captain. You don't want to be captain hindsight and always beat yourself up and say, oh, I should have done this. I think I see a lot of investors doing that when they get involved in Bitcoin. But along that as well, you're very right. Bitcoin and cryptocurrencies in general, I think, are going to start following the trend as well. What we see in the cryptocurrency space is that we're continuously building new levels of value in this case, testing new levels where this space actually holds fundamental value. And you can use a lot of major indicators like NVT, which is, I always mix up the acronym. It's like net volume. transactions or transactional volume, basically the amount of money that's actually being sent over the network divided by the value of the network, in that case, the market cap. There's a lot of really interesting indicators like that. It can tell you when the market is fairly valued or overvalued. And we find that we're making higher levels each and every time in regards to valuation while we still keep these indicators intact. So it shows us that there is a slow but steady growth of adoption in cryptocurrencies. But you had mentioned as well, not beating yourself up about missing the opportunity. It's one thing to not beat yourself up over mistakes of the past, but to realize that this space is really early. I understand a lot of people think we had our dot-com bubble of crypto back in December of 2017, where there was ridiculous levels of altcoin rallies across the board, and it didn't really make much sense. But a lot of people don't know that between a variety of studies, the conclusion that I've been able to come up to is that we have about 1% of global adoption for cryptocurrencies. That's a very important statistic to take into account because that's the equivalence of the internet during 1996. So before the dot-com era, before any kind of real adoption in this case, it was really the days where the internet was seen as a thing for geeks, hackers, and every niche group you can think of, not the mainstream. But when we, over the next few years, and I think we step into the 2020s, I not only think you're going to have the perfect storm, which is a mixture of currency crises, potentially a global recession of some sort, maybe not as severe as 2008, but a mixture of uncertainty in the economy. And now that cryptocurrencies are much more developed, much more scalable, and much more practical for everyday use, as they'll continue to fit into those categories, you're going to find the perfect solution coming in at the right time. And I'm really excited about that. And I'm excited to see, we've seen 1% adoption. What does 5 or 7% adoption look like it was during the dot-com era for the internet? And what is it going to look like when the world adopts crypto over the next 2 or 3 decades? I'm very excited about that. That's kind of what I'm working towards. And I always tell people, again, look forward to that. Think long term. Don't get caught up in the short term. I know because the space is so volatile, we can get caught in the short term windows, but it's really about the long term play.
So, Nicholas, you're using the word crypto, and I use it all the time. But I'm curious, it's very broad. What interests you specifically about crypto? Is it Bitcoin? Is it the different use cases? Is it everything across the board? Is it the monetary component? What has your interest in regards to crypto?
Yeah, I think that's a really good question because cryptocurrencies are quite broad now. You have peer-to-peer cash, you have utility tokens, security tokens, like all these types of different definitions. And I'll be fair, to your question, to be very simple, I really do focus on the peer-to-peer digital currencies. To name a few would be such as Bitcoin, Litecoin, Dash, Monero, some of the new currencies that have come out like Nano and Grin that offer different types of technologies as well. So I have a basketed approach. I definitely am focusing on a variety of currencies, but ones that fit into that category. And the reason I say that is because I've looked through a variety of applications for blockchain technology. It's a very interesting technology, but at the same time, even though there are a variety of industries like supply chain logistics, any kind of removal of legal middlemen in the process of going through business transactions and asking whether or not something did happen, that's a huge business. So I think those two are really what excite me for blockchain and removing inefficiencies. But the biggest thing is money. To give you a good marker as to why I believe that, it's the size of currency markets. So currency markets outside of real estate are the largest store of value. Now, I understand currencies can depreciate. It's not like gold in this case, where there's usually a much more steady rate of inflation with the increase in the gold supply. But with currency markets, it is the second largest store of value under real estate. And that measures anywhere from $84 to $200 trillion, depending on what money supplies you're factoring in. So let's even take the conservative estimate of that, of 84 trillion. If cryptocurrencies can tap 10% of that market, that means that we're set to become an $8.4 trillion market. And I think that that's something very reasonable to expect over the coming decade, that we could tackle 10% of that wealth. Most of that, I think, will be extracted out of emerging market economies. We're seeing in Venezuela and Argentina and a variety of other countries, I think Chile as well, having issues with stability in their currency. You're seeing it in Turkey and Iran, a variety of different regions of the world, struggling to maintain their currencies. And I don't think it's just going to be a few small niche currencies. I think in the next 1 or 2 years, you're going to see a challenge on the value of the Chinese yuan. I think you're going to see a challenge on the Indian rupee. And once you start getting some of those major world currencies into play, and some of the value and also the participation in those currency systems shifts out to crypto, I think that that's when you're going to start to really see this market form. And we'll start to realize that the killer application for crypto that everyone's looking for has already been here. It's money. And I can't think of anything else that would require removal of middlemen and independence in this case other than money.
Yeah, it's interesting. And I actually had a call with Simon Dixon that I haven't released yet, but we were talking about crypto and its use case. And when you think about it, all of them boil down to some sort of monetary component. And I'll explain what I mean. When you consider a barrel of oil and the concept of backing our fiat with oil or backing it with gold, ultimately there's some sort of fundamental use case that gives it some intrinsic value. So all of these different cryptos, which might have some sort of data storage property or prediction market property or what have you, it all boils down to people valuing it as some sort of monetary transaction. And so even though Bitcoin is really just money, I mean, that's how people see it, right? But even some of the other ones, which don't really have a monetary use case, still boil down to money when it's all said and done. Would you agree with some of what I said there?
Yeah, I'd say, for example, what you're bringing up is almost a class of currencies that would almost fit under some kind of utility category. I wouldn't say, for example, we mentioned like prediction markets like Augur and a lot of the other major players like that. They're not supposedly utility tokens. They are cryptocurrencies. But you are right in the sense that some of them provide some kind of sense of utility or some kind of functionality. And I'll be honest, I think there's room for both in this case. And not to mention, as it mentioned, it's still kind of down the same category. It's a value exchange. And that's why there can be a speculative value over these cryptocurrencies that have some kind of utility. They're still currencies at the end of the day. So if they don't have brand awareness, if they aren't easily used in commerce, then they're going to have very volatile speculative value. And I think that's the thing, again, as you pointed out, we have to realize this is really just a market of currencies. It's an emerging currency class. And until we start to realize that, I think we're going to keep digging down a lot of rabbit holes that lead us nowhere. And if we finally hit the nail on the head and understand that this is a currency market, we're going to be moving at a much faster pace, in my opinion.
So let's talk about some news that's kind of fresh off the press. You've probably heard about it. If you haven't, it doesn't matter. It's still it's what it represents that I want to kind of ask you about. But two over-the-counter trading desks say their accounts at Gemini, the crypto exchange founded by U.S. investors Cameron and Tyler Winklevoss, were abruptly closed without explanation over attempts to redeem GUSD, the company's stablecoin first introduced in this September. So it's kind of indicative of the early stage. This is Gemini, a major representative of the crypto community, something that, people would largely trust. If you're going to trust crypto to a certain degree and you're going to trust some of the organizations that are out there, Gemini is kind of at the top of the list there. And they had this issue. So what's your thoughts on, the early stage and just kind of what we're dealing with in the wild west of crypto at the moment?
Yeah. I mean, in that case of Gemini, I definitely have to do a little more research before I could speak on it. But if anything, and to play the devil's advocate in this case in defense of Gemini, the only thing I think I would potentially consider as to why they might have had to freeze things is that on OTC desks, you find a lot of people who are doing large orders in the crypto space. And sometimes you have to wonder about where the source is on these trades and all these transactions. That's a big problem in the OTC world, unless you're kind of in the offshore world and where they really don't even play by the rules. But Gemini is very regulatory compliant in that case, seeing as they have a U.S. license of operations. So outside of that, though, we are in the wild, wild west still. I think, again, as we sit at this 1% of adoption, we aren't even at .com levels. So we haven't even seen the craziness just yet. But I think more than anything, there, with the news with Quadriga CX and a lot of these exchange hacks and people worried about their funds, I think it shows the important factor that if you're going to get in this space right now, it's very important to spend the few minutes to an hour to understand how to store your own funds, to keep funds on exchanges for a limited time window, only to do the transactions that you need to conduct. And outside of that, really becoming your own bank, taking the liberty of what cryptocurrencies offer and really executing on it. I have no doubt in the future, the vast majority of people won't want to hold their own crypto. It is going to have to be managed under a custodial solution, because I look at the world nowadays where everyone wants everything streamlined for themselves. And that's understandable. Finance can be complicating for some people, but I think in this day and age, the biggest thing is, as people keep drilling in, not your keys, not your Bitcoin in this case. That's like the big thing that's going to be relevant for the next 2 or 3 years, in my opinion.
So, what's the marriage between the liberty that is afforded through crypto, the government acceptance of it, Wall Street acceptance of it, and how important are all of these three in terms of the success of crypto, in your opinion? Is crypto dependent on any other prongs of the triangle?
Yeah, I mean, well, it depends. If increasing value, or like an increase in the value of the market cap, is what people really care about as success or define as success, then yeah, you're probably going to need Wall Street and a lot of other people to get involved, because right now there's a lot of people who aren't going to buy Bitcoin unless it's an ETF, or unless they can buy it through some other kind of format than what's offered right now through Coinbase or most mainstream exchanges. Um, that's one thing that I think is at least clear and transparent if we're going to be neutral on this, because a lot of people say, oh, we don't need Wall Street. We don't need a lot of these people to get involved. But a lot of people don't want to become their own bank. A lot of people want to make sure that they have someone that they can say, hey, this person was accountable for holding my money, and there's insurance backed behind it as well, because problems do exist. So I'd say that that's one thing we need to factor into account. Does cryptocurrencies really need Wall Street, or do they really need it? No, I don't think they do, because the vast majority of adoption for cryptocurrencies is going to happen in an area where Wall Street doesn't hold jurisdiction, and that's emerging markets. That's in areas like Venezuela, where people are actually using Dash right now, for example, for real transactions. They've got serious merchant adoption, where they've got over a few thousand merchants in Venezuela alone. Excited to see the kind of normal organic adoption in areas where there is corrupt governments. There are central banks who time and time again mismanage monetary policy and strip the wealth from everyday people. They need to find an exit, and since other cryptos. So I would say no, we don't need Wall Street, but Wall Street is going to play a role in all of this, and it's best if in order to make sure we get the best financial products, to try to find some common ground and work with regulators, because I know that there are some corruptive aspects with regulators as well as there is in the business world. But I'd say that the vast majority actually want to see the space grow, at least from what I've heard from people that work with regulators at the moment.
So, Nicholas, I know you're really hot on trends, and you really follow what's going on in crypto. And this is something that I expect to be around for many, many years to come, as you do as well. Are there any other interesting things in regards to crypto that have you really excited about what's yet to come down the pipeline, or other technologies for that matter? I mean, that might really revolutionize where we are today in 2019 to where we might be even just 5 years from now, because things are just moving so fast in the world we live in now that, it's so hard to know how the world's going to look in 5 and 10 years.
Yeah, there's one technology that's really grabbed my attention, and I hate to go down the same exact pipeline as talking about peer-to-peer digital cash, but there is a really cool technology that's really being used for private digital currency, and that's Mimblewimble. It got a lot of press as of recent with the launch of Grin and Beam, which are the first two cryptocurrencies to actually utilize the technology. But it's a very unique technology in the sense that it's not only extremely lightweight, meaning that unlike other systems that require blockchains and require heavy data, heavy levels of data on transactions in order to encrypt them, like Monero and a lot of the major ones like Zcash, Mimblewimble is the technology, and the two currencies that use it, Grin and Beam, are very lightweight, and they provide a very key essential factor that is not found in Bitcoin and most mainstream cryptocurrencies, and that's fungibility and privacy, which kind of come hand in hand in the sense of crypto. And having real absolute privacy, not knowing transaction amounts, not knowing who's doing business with who. And I think a lot of people would look at this and think, oh, wait a minute, this is just for criminals, right? This is just simply being used for the Silk Road. But the thing that people don't understand is that there's an absolute necessity in order for crypto to proceed forward in business adoption. It needs to be private. It needs to be real digital peer-to-peer cash. That's what we're building after all. So the reason why that's essential is because if let's say, for example, I'm a business, and say I'm a Fortune 500 company, and I'm a business traded on public stock exchange, I need to report quarterly earnings every 3 months. So when I go out to report those earnings, there's very key information that people should not know about until that quarterly release. Well, if I did business with a consumer and that consumer knows my address and is able to find any decent amount of my transaction history, if not all of it, then they're going to know how much revenue I did in this quarter. And again, huge violation that would keep any business, any mainstream business who has to report quarterly earnings from accepting cryptocurrencies. So a very big point to factor into mind. You need the privacy aspect. So basically, I think we were talking about the third key factor that I always take into mind as well when it comes to this importance of privacy is that outside of, our traditional or kind of the Western markets where, we already have a banking infrastructure set in place and we have much more stable governments, I think it's very important to think about not just what it's like in the West to do commerce, but also in developing economies. So again, I know I keep bringing up Venezuela, but it's one of many countries where you have a mixture of a corrupt government, you have a central bank who mismanages monetary policy and doesn't want competition. And if you have those factors in play, you need to have privacy when you do commerce. You can't have the government being able to trace your transactions. And that's why Dash is really big. They do have private send, as well as Monero and a lot of other private cryptocurrencies. And that's why people started to mine them and use them in commerce. So that's the big push there, I think, more than anything, is understanding that privacy should be a standard in the 21st century, especially for people who need it.
Nicholas, I'd like to ask you, and I know it's so difficult to predict exactly what's going to go on in the markets, but how bad do you think this bear market can get? And that's one thing that I've actually, because I've seen what happened in gold, with it going to 1900 and then just stay in this perpetual bear market. I was very open and I anticipated a brutal bear market in crypto. And here we are, in the $3,000 range since November. We were in that $6,000 range since August, right? And it just we've kept going down. And I'm just wondering, what are your thoughts as this bear market continues to pursue? Is bad news going to continue to weigh on this sector despite positive fundamentals that we're talking about right now?
Yeah, I don't see the space or really valuations, to put it more specifically. I don't see valuations dropping much more from where they are now. I think we are clearly setting up in a bottoming pace right now where basically prices are pushing sideways. I think really the range at 3,000 is where we're going to see this bottom in the market. And now it's just a matter of remaining patient. The problem is that the bear market itself has already been a drag, but it's going to be even worse because I think it's going to take a good, at least 4 or 6 months of bottoming before we really start to see any major uptick in price. And I'm saying that as someone who spends every day researching the space and is heavily engaged in it. I think it's a good time not only to reflect on the craze and the overhype that was built in the space back during 2017, but along with that, to really build out some nice technologies and to start to realize, what this space is really about. You've heard me ramble on about the idea of a stored value in peer-to-peer cash. And I think those are really where crypto and blockchain are really going to find their value set. But a lot of people still are caught up on the enterprise idea of blockchain and a lot of other factors. So to put it lightly, I think that another 4 to 6 months, we're going to be continuing to push sideways, testing this level as a store of value, as you mentioned earlier, and very similar to what we saw back in 2014 and 2015 for Bitcoin. And then after that, we're going to really start to pick up pace. And my next target for the upcoming bull market in this case could be anywhere from, it's such a wide range. We really don't know what it's going to be. But if you were to do a 20x, which is usually what we commonly see in Bitcoin, we'd see somewhere well above 50,000 towards 60,000 or if not more. So I think what you're going to find with these cycles is that they take longer to build a new base because you're building higher levels. You're testing higher levels as a store of value. And then after that, you're also testing much higher ranges in this case. So it's going to take much more time, much more liquidity to get to them.
Yeah, that's powerful, and I like that. So I've talked about this, and I haven't asked any guests this in a while, actually. But the 2017 historical bull market, one of the greatest bull markets we've ever seen in history. Some people have called it the greatest bull market we've seen in history. Maybe that's true, but do you see that as a positive thing for Bitcoin, or was the overhyped sensationalism that we saw in crypto across the board, was it a negative thing?
Yeah, I look at it very much like anyone views like the dot-com bubble. I would say that it's not positive because you end up getting a lot of people burnt in the process, as seeing as this is an investment market. Crypto hopefully will just be seen as a currency class later down the road, but there's an investment in speculation around because it's got so much room to grow if it does reach its full capacity. So with this, I think it wasn't obviously a good thing because a lot of people get burned. But at the same time, I don't think it's going to despair people from getting re-involved in it and riding the wave of speculation again until this market really becomes formed and less volatile. I'd say more than anything, it's something that we have to accept and understand. And like I mentioned, I mean, when we get twice or three times the rate of adoption we have right now, or get up to 5 or 7%. That's going to be major for cryptocurrencies. So, I'm excited about seeing the potential growth in that case.
So, Nicholas, this is one of those times where it's kind of hard to bring up crypto to people in certain instances because they don't want to hear about it. They've been burned. They got in at, let's just call it the $15,000 benchmark for Bitcoin, whatever coin that might have been in, and they're looking at $3,000 or $3,400, and it's just such a difficult thing to bring up when it's not popular. Obviously, when it goes back to 50,000. Everyone's going to want to hear about it, right? You're going to have people quitting their jobs, becoming traders, and, acting like they're geniuses because they got into Bitcoin $40,000, right? But I just want to emphasize the importance of, buying and being in areas in the market that you believe in while there are blood in the streets, because that's when the real money is made. So, as we close out this interview, why don't you share some thoughts on that?
Yeah. And this is something that's hard to get through to a lot of people, because I was one of those individuals where at 2,000 or 3,000, I was like telling everyone about Bitcoin. Probably one or two people listened or got a little bit of it, but I was even telling my family about it. And then they were interested around like 18 or 20,000. I'm like, you guys are thinking in the wrong psychological mindset for markets. Yes. I mean, I would say more than anything, it's to understand that risk and reward. That's the biggest thing. Every trader has to take into account risk and reward. But when you enter into a position, I would step out of just saying, look, I just want to buy some. Really understand at what price you're paying for something, like a good or service. I'm not someone who would go out and buy something the first day it comes out. I think that's a terrible decision. Wait a week or two and wait for prices to reduce, wait for demand to reduce, and then you can actually get the good or service you're looking for, and most likely at a cheaper price. It's the same with markets. Even though I might be excited about something, I wait until I get what I believe is a fair price, especially if I'm doing it as an investment. Because if I know that if I can wait and get a possible 50% reduction on the cost to purchase a financial product, I'm going to wait, because I can get double the return if I believe it's going to go to the same level that I had estimated before. If I have a target for Bitcoin at, say, 30,000, right? It would be much better if I waited from 6K to wait down to 3,000, right? And to wait for those bottoms in markets. And I'd say the biggest thing as well is just simply wait for a shift in trend, right? No one can probably predict the bottom or the top. The big thing I tell people is wait for the direction to start to form in the chart. So we've been continuously declining in Bitcoin in this case, outside of really holding 6,000 for a while. But if we start to hold that bottom again, and you start to test some of the bigger evens like 4,000 or 5,000, that's when you can get a confident signal that, okay, the market cycle is shifting. We're starting to shift into the positive range rather than continuing into a bearish trend for the next year or so. So I really look at the momentum of the chart. That's what can give you a lot of guidance. And once you start to see that shift, you might pay a little bit of a premium off the bottom, but you're not, picking the top, and you're also, not trying to struggle to catch a falling knife. So that's, I think, the happy medium that I would go for.
Yeah. And you know what? I'm not going to disparage people. And I know you didn't do that either. It's always easy to be like, oh yeah, look at everyone, how they got in really late. And, honestly, when I got most excited about crypto, and not that I invested at these times, but, I was checking my apps every 30 minutes when it was 10,000, 12,000, 13. I mean, we were all like so enamored by this historic market, and I'll be honest, like right now is not the most exciting time to be in it. But look, if you want to make money, you have to be buying now. If you believe in it, if you believed in Bitcoin 20,000, arithmetically it makes sense to be looking at it at $3,400. So I think that's why it's so important to have a guy like you on, Nicholas. And I just want to give people an opportunity to find out more about you. If you would, tell us a little bit more about your YouTube channel and your website and what you have going on.
Oh, thank you, Kenneth. I appreciate it. I love what I do in the space. And if you guys would like to check out my channel, the channel is just simply called Datadash. You can look it up on YouTube. It would be the first result you'll see. Outside of that, as well as Kenneth mentioned, we do have our website, nicholasmerten.com. We also feature our newsletter, which we started doing back a few months ago. If you guys would like to check that out, it covers cryptocurrencies, traditional equities, commodities, and FX markets. So the whole shebang. I'm a macro trader personally, so I love getting a whole big picture view and finding where the opportunity is. And outside of that as well, just staying tuned for any potential other things that we work on over the future. I'm currently working on something known as Project Genesis, as I had talked to you about beforehand, Kenneth. I can't talk too much on it, but we're going to be trying to add our own kind of spice to the crypto space and adding our own kind of innovations that are some thoughts that I've had in my mind for the past 2 to 3 years. So I'm excited to talk more about that later down the road.
Well, thank you so much, Nicholas, for coming on Crush the Street. And what a pleasure, everyone, it was to listen to this interview today. Nothing but the top-notch guests we're going to have on this show. I'm going to really work to have the best and brightest minds here for you guys in 2019. And it was a pleasure having you on, Nicholas. Thanks for coming on the show.
Kenneth, absolute pleasure. Thanks for having me, man.